federal government announces its 19th free trade deal, this time with the United Arab Emirates, as it eyes off billions of dollars in potential investments. Money manager Regal Partners shakes up the funds management industry by bidding for rival Platinum Asset, and the work-from-home revolution is waning, with Amazon ordering everyone back to the office. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 18th of September 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
The main story this morning, Sean, the federal government has done a trade deal with the United Arab Emirates, or the UAE, which in the short term will save local exporters $160 million in tariffs, but in the longer term could help access billions of dollars in investments.
Trade Minister Don Farrell yesterday said trade between the two countries, currently worth just under $10 billion, will increase significantly under the deal, with 99% of Aussie products able to enter the UAE without paying tariffs. Australia's main exports to the UAE include alumina, meat, dairy, oilseeds, seafood, steel, canola seeds, nuts, honey, coal, chickpeas, lentils, and higher education. It's our biggest trading partner in the Middle East. Mr. Farrell said imported goods from the UAE include furniture, copper wire, glass containers and plastic, and these goods should become cheaper at the checkout or for tradies, he said. The prize in all this might be much more than what's going and being bought and sold between the two countries at the moment. The UAE has established a $30 billion $40 billion Aussie dollar climate-focused investment vehicle. Trade Minister Don Farrell is hopeful of marrying that investment with preferential treatment for Australian supplies of critical minerals and rare earths. If successful, that is quite the boom for some of our resource companies.
All right, so this is the UAE. We seem to have signed a whole lot of these, a bunch, I think is the technical term, a bunch of free trade deals in recent years.
Yeah, look, we have. Yesterday makes it 19 free trade or cooperation agreements in place, though sometimes free might be a little optimistic. The FTAs include deals with Chile, India, New Zealand, UK, US, Hong Kong, China. We did one with Indonesia, Japan, Korea, Malaysia, Singapore, Thailand and Peru. There's also deals with countries in the region that come under a larger umbrella agreement, such as the Comprehensive and Progressive Agreement for Trans-Pacific Partnership. Long acronym, that one, but it involves lots of smaller countries in the region. For years, governments around the world tried these massive multilateral trade deals, getting a bunch of countries to agree. That's very, very difficult to do. They've gone out of favour for these two-way deals. The goal is to reduce or remove barriers to trade and investment, thus provide a competitive edge for Australian businesses and investors. This new one with the UAE adds to that, and certainly the big prize there, though, is potential investment from that country.
All right, let's take a look at local markets now. How did things go yesterday, Sean?
Good effort. Nice question. The local share market pushed above 8,150 points for the first time yesterday, Michael, before it finished up at 8,141 points. That was up just 0.2% for the day. It officially set a new high of 8,150.5 points on the back of growing confidence that the US Federal Reserve will cut rates in the world's largest economy by 50 basis points tomorrow, Australian time. Overall, it was a fairly subdued session, not a lot of movement. All 11 sub-indices were higher, led by the tech index. The banks and miners also did okay, while the retailers were mostly lower.
I realise in hindsight that I may have asked that question. I was a little bit subdued, really, wasn't I? Considering it's quite a momentous occasion.
I know.
Passing the 8,150 point mark, there should have been more fanfare in that question, and I apologise.
No. Well, the actual story, because the market itself was really quiet yesterday. And so none of the banks did much, none of the retail. Of the top 20 or 30 stocks, I'm doing this from memory because I don't have the information in front of me, but I don't think anything moved more than 1%. No, Fortescue might have been up a bit. But like of the top 20 or 30 stocks, hardly any of them had any particular move. But having said that, we hit a new all-time record. So it was still like I don't know what you'd call it, a subdued celebration or something like that.
Yeah. So I don't feel too bad then about not asking you with enough enthusiasm about local markets.
No.
Okay. All right. International markets. Much happening there, Sean? That was better, wasn't it?
Yeah, no, it's good. The sentiment around iron ore prices is very negative at the moment, with the Commonwealth Bank warning prices may fall towards $80 a tonne. The problem is that there are piles and piles of iron ore in China. Steel mills just haven't really picked it up to use it yet. The world's second largest economy, particularly its property sector, is in a lull. Now, it's not a slump. The economy is still expanding, but it's just not growing anywhere near as fast as it has over the recent decades. Doesn't need the iron ore, which of course is used to make steel. That's a problem. It continues to weigh on Australia's big miners, and it certainly won't help the federal government's bottom line because lower prices reduces tax royalties from iron ore. In oil markets, prices are rising, though they remain relatively low, with Brent crude around $73 a barrel. That's on the back of a reduction in Libyan exports and expectations that the Federal Reserve might have to cut rates by 50 basis points to stimulate the US economy. On Wall Street, Microsoft unveiled a $60 billion it's about 90 billion Aussie, stock buyback program, matching its largest ever repurchase authorization. It also raised its quarterly dividend 10%. That's what you do when you have plenty of cash, I suppose. And finally, the Aussie dollar is buying 67.5 US cents.
Sean, bit of a PSA. I've forgotten what PSA stands for. Spur of the moment. Public service announcement. There we go.
There you go.
About the Fear and Greed newsletter, which comes out in just a few hours.
Ah, yes. Full of really exciting insights. Now, don't ask me too much about what those insights are because they're still formulating in my mind, Michael.
At the moment, they are concepts.
They are concepts. Yes, concepts. That's definitely the way to put it.
To quote Donald Trump from last week. But if you have not yet signed up for the Fear and Greed free weekly newsletter, you still have a little bit of time to do it. Head along to fearandgreed.com.au, pop your email address in, and you will receive it. And it is chock-a-block full of those solid gold insights and nuggets from Sean Aylmer. You do not want to miss it. We'll be back in a moment with the rest of the day's business news. Sean, fund manager Regal Partners has made a bid for global equities group Platinum Asset Management, sending the latter's share price up nearly 15%.
It's kind of a merger of royalty in the funds management world. Platinum was founded by one of Australia's best-known investors, Kerr Nielsen, while Regal is run by one of the country's most successful recent investors, Phil King. If successful, Regal will control a $29 billion funds management empire, pretty much puts it in the big league. Regal's bid is a scrip-based offer, meaning Platinum shareholders would get shares in Regal if the deal goes ahead. The inferred bid price is $1.14 a share compared to Platinum's closing price on Monday of 99 cents a share. It's a premium, but not exactly an overly generous one. The two companies are in the same industry, but on very different trajectories. Regal is growing, buying businesses. Its share price is up 45% this year. Platinum is shrinking. Its share price is down 85%. Since its peak of 9 years ago. Its performance hasn't been that good, and it's had a lot of outflows of funds under management. Anyway, we'll see where this one ends.
Indeed. Now, the rate of business failures, Sean, is at its highest level in 3.5 years when Australia was in the midst of the COVID pandemic.
The failure rate for Australian businesses is sitting at an average of 4.95%. And Credit Reporting Bureau, Creditor Watch, expects it to increase to 5.2% over the next 12 months. Low levels of consumer spending, high inflation and interest rate increases are driving the failures, with the food and beverage industry hardest hit, followed by administrative and support services. At the other end of the spectrum, agricultural, forestry and fishing companies are doing best. Not helping is the tax office actively chasing debts. Court actions are now well above pre-COVID levels as large creditors such as the banks and the ATO resume collections activity. Not auguring well for the future is the jump in business payment defaults, which according to Credit Watch have risen 68% in the past year to record levels. Essentially, an increasing number of businesses are unable to pay their invoices from suppliers. That is a leading indicator that more businesses will fail.
Yeah, not a lot of good news in there, but it is important news. And you've got an interview with Patrick Coughlin, CEO of Creditor Watch, coming up after the show.
It's all about why companies are getting themselves into trouble. And Creditor Watch is a credit agency. It knows all about what's happening between buyers and suppliers and whether people are paying their bills. So it itself is a great leading indicator of what's happening in the economy. And as you say, Michael, the news isn't great.
Indeed. Now, Labor governments and business, Sean, haven't always been haven't been the best of friends, have they? Haven't had the
No.
friendliest of relations. And while there's plenty of noise around business being upset with the Albanese government at the moment, the Prime Minister himself said that everyone's on the same page.
Maybe. Speaking ahead of last night's annual Business Council Australia dinner, Mr Albanese said the government isn't going to revisit IR reforms that have irritated the business community. He said the government had created 1 million jobs since coming to power, including higher wages. In his speech last night, Mr Albanese said the 5 areas which the Business Council cite as needing attention: housing, cost of living, the care economy, net zero and skills are all being addressed by the government. He said because the business community's priorities and the government's priorities are the same, they're in sync. Not so sure about that, Michael.
No, I don't. It's always been curious to me the way the government takes responsibility for the creation of all jobs within the economy. That as soon as there is, and this happens across Labor, coalition, any kind of side. Whenever any party is in government, there is always full credit to the government for creating these jobs, regardless of what the policies were that seem to actually lead to them.
Yeah, and regardless of how much business actually worked to create the jobs themselves.
Yeah, indeed. Now, another interesting little kind of element out of Canberra, the Prime Minister has left open the possibility of a double dissolution election.
Yes, but only just. The housing-based Help to Buy legislation could be the trigger. If it's rejected by the Senate this week, Labor would then need to wait 3 months before putting the bill to a vote in the upper house again, if it's rejected. To do that, the Prime Minister would have to recall Parliament in the week before Christmas. If it's rejected, he would then need to call a double dissolution election, if he wanted to, by Australia Day. No one really thinks it will happen, but yesterday, when asked about it, he just didn't totally count it out. So obviously he doesn't mind having the idea floating around, even if it's unlikely.
Now, Star Entertainment's shares are suspended at the moment, having not filed the full year results by the August 30 cutoff. But there are media reports that its lenders are ready to bail the gaming group out.
After weeks of discussions between the company and its banks, the lenders have verbally committed to provide a 2-tranche extension to the casino operators' loans, including an immediate $100 million injection to meet urgent cost blowouts at its new Queen's Wharf resort in Brisbane, according to a report in the Fin Review. A second tranche worth about the same would be available to Star if required and conditional upon the company also raising capital in other forms. The fresh funds are designed to give Star's directors and the company auditor, EY, comfort that the casino operator can meet its short-term expenses, which would allow them to sign the company's accounts. Star also needs to prove its financial viability to the New South Wales casino regulator by the end of next week.
Coal miner New Hope says full-year profits have halved as coal prices continue to fall, but a decent dividend triggered a 3% jump in its share price yesterday.
New Hope owns thermal coal mines in New South Wales and Queensland. Yesterday it said it sold its coal for an average price of $183 per tonne in the year ending July 31. That's down from $346 per tonne the previous period. Now, that previous period was a record. Yesterday's results were slightly below analysts' expectations. The group said a milder winter in the Northern Hemisphere and an increase in customer inventories resulted in softening demand, creating downward pressure on prices. New Hope reported a net profit all up of $475 million, down from $1.1 billion the previous year.
All right, turning to international news, Sean, how about this one? The work-from-home revolution is waning, it seems, with Amazon, the latest big tech company to order people back into the office 5 days a week, and Amazon has a lot of staff.
It sure does. From next year, things are going back to the pre-COVID way of working, CEO Andy Jassy said. He said it's easier for teammates to learn, model, practice and strengthen culture, and collaborating, brainstorming and inventing are simpler and more effective when everyone is in the office. Amazon will also end hot desking and bring back assigned floor plans in its US buildings. Amazon's been at the vanguard of the return to office drive, making it an outlier among tech companies that continue to offer more flexible terms. Google requires staff regularly to attend one of its buildings 3 times a week, and many startups remain completely remote. In other sectors, such as financial services, there have been more 5-day mandates, but typically just for certain staff, like traders, senior managers in financial services. Last year, JP Morgan Chase told its managing directors they need to be in full-time to set an example for the rest of the company and help train juniors.
1.53 million people. That is the Amazon staff. And look, a lot of those wouldn't be kind of in offices.
No, a lot of them are driving, the delivery people.
Driving and warehouse and all that kind of thing. But still, big employer. And this is a big decision.
Yeah, it sure is. What I like about it is that they're not going to hot desk anymore. So remember the trend of hot desking? And so you got your own computer and you could sit anywhere and everyone just ended up sitting in the same spot all the time. But
and if you did have to move, nothing ever felt clean.
Well, this was your nightmare, wasn't it? When you had to move and sit somewhere where someone else had sat, and you would have had wipes, I'm sure. Just to
I was a hand sanitizer user long before the pandemic, so I've been cool for a very long time, Sean. Donald Trump and his sons are promoting a new crypto platform as the Republican presidential nominee courts the digital asset sector just 50 days before the US election. We are getting close.
We are getting close, and you wouldn't think that one of the candidates would be really pushing a business interest. However, Donald Trump Jr. and Eric Trump, along with New York-based property developer and major Trump donor Steve Witkoff and his sons Alex and Zach, joined an X Spaces conversation on Monday where World Liberty Financial was officially announced. The company says its mission is crystal clear: make crypto and America great by driving the massive adoption of stablecoins and decentralized finance. The company hasn't given many details of how it will operate or what products it will offer, according to the Financial Times, but it has already put out a warning on scams and fake tokens. Trump's pro-crypto comments marked a departure from his previous views. He has previously said the value of cryptocurrencies is based on thin air and that investing in them is potentially a disaster waiting to happen. But he's changed his mind. He's embraced digital assets during the 2024 campaign, accepting donations in cryptocurrencies and calling for the US to be the crypto capital of the planet.
I just love that. Make crypto and America great again. Like, it's just, it is the perfect collision between Trump's politics and Trump's business interests. That's just fantastic.
It just won't fit on the cap. That's the only problem.
Oh, that's a very good point. Might need to go to a T-shirt or something for that in order to get the whole slogan. Up next is the Fear and Greed Daily interview. Patrick Coughlin, CEO of Creditor Watch, is your guest.
All about the number of companies, in fact, the largest number in 3.5 years of companies that are failing and the disturbing news about those not paying their bills.
Indeed. It is coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you sign up for the weekly newsletter, which comes out in just a couple of hours. So make sure you have signed up now so that when it lands at around 10:30 or so, 11 o'clock, that you will be one of the first to read it. Thank you very much, Sean.
Thank you, Michael.
It is Wednesday, the 18th of September, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.